Hello, my name is Keith Otto from Englewood Cliffs, New Jersey. I'm a Senior National Sales Director, and I want to talk to you about protecting a family, protecting a client. I think, sometimes we sit down with clients and they're already spending money and they have cash value life insurance, and we sit down with them and try to save them money. It's a simple process because someone's already spending money and they're spending X amount of dollars on a monthly basis, and sometimes you could show them how to get more protection or the same protection for a lot less money, or how to get more value. What I want to talk to you about is what happens when you sit down with a client and they have no protection. The sad thing today, folks, is some people own the wrong type of life insurance that might not be adequate for themselves. But worse than that is when people have no insurance. So I want to give you some examples or some analogies that we use when we sit down with people and show them how to protect them. And so the first thing I want to talk to you about is really when you're putting together your presentation, when you get to the part, it doesn't matter what presentation you use, whether it's a 6-page, whether it's a 4-page, or use a napkin presentation. But when you get to the part where you talk about the financial needs analysis, and I always try to tie the financial needs analysis in and try to identify, there's 3 things we're going to do. And we put together a financial needs analysis. After you explain to them the features and benefits of an FNA, what I would talk to them about is the 3 things that happens when you do a financial needs analysis. It identifies 3 things. It identifies what are your needs, what do you want, and what can you afford? And it's really not what you can afford, it's what you're willing to afford. Like sometimes I'll say to people, hey, listen, how much money on a monthly basis do you want to put towards your financial future? They say, things are a little bit tight right now. And I said, well, if you could take $200 a month and I can get you a brand new Mercedes for $200 a month, they say, then I have the extra $200 a month. So it's not what you can afford, it's what you're willing to afford. So when we talk about a financial needs analysis, we talk about identifying specifically the FNA is the N in FNA is your needs. What's your needs? We're going to identify what your financial needs are. So I use this example of putting together what we call a financial house. And I would write little FH, financial house, in the paper, and I would actually draw out a little house. And so when you sit down with a client and you put together their financial house, you use an example of a regular house. You would never build a house on a beach without a foundation. There's no way. Every house has a foundation or has a basement. That's the first thing. The footings are the first thing you do. You don't build a roof and then throw the house right underneath it. What you do is you start with the foundation. Well, in your financial house, folks, your foundation is your insurance. In my opinion, life insurance is not for an investment. It's not for a retirement plan. It's to replace income. Life insurance is really income replacement. So let's just give an example. Let's just say you're sitting down with a client and you use an example of how much money on a monthly basis do you need to replace. Sometimes you don't just say how much money do you make because sometimes it's intimidating. So I would say, hey, how much money on a monthly basis if I was going to come to your house today and I was going to pay all your bills for the month? Just make up a number. Usually the number they make up is very similar, very close to what it is. So let's just say, I'd say, how much money on a monthly basis would you need to replace your income? And they say $4,000. I say, well, look, this is you, and I would draw my little stick people here. This is you, and this is your spouse. Both of you right now work, right? Both of you bring money home to the kitchen table. Well, if something happened to you yesterday, that money stops, doesn't it? I don't mean to kill you. I just met you, okay? But if something happened to you yesterday, that money stops. Well, just because you stop producing income, don't your expenses still stay, right? Other than you eating a little bit less because you're not here, right? Think about this. The lights still burn. The electricity still has to be paid for. The phone still has, right? The kids, the expenses, your mortgage, your tax, everything at your home and your family, you still need to replace that. And so while you're providing for your family while you're alive, wouldn't it make sense, God forbid something happened to you yesterday, to make sure that they were protected? So let's just use this number. Let's just say $4,000 a month. Well, if you had a lot of money sitting in an investment or an account somewhere that didn't replace you but replaced the $4,000 a month that you had coming in, then you'd be in pretty good shape. That's called retirement. See, retirement's not an age, it's an amount. When you have enough money that goes to work so you don't have to, technically you're retired. But the challenge in the early years while you're young and you usually have debt and you have expenses, you need to have income protection, which is life insurance, to replace that. So let's just say $4,000 a month was the number. So let's just say, as an example, we put $500,000 of life insurance on you. Now I'm just using this as an analogy, okay? $500,000 is a lot of money. If you gave me $500,000 or I gave you $500,000, that's a lot of money. It's $500,000. But $500,000 is not a lot of money if you're spending $4,000 a month and your kids are young. See, if this is you and this is your wife, and let's just draw this out, you got 2 little kids over here, God forbid something happened to you, you'd have to protect those children. You have to protect your assets, which is your family. So let's just say the $500,000. See, you could take that $500,000 and you could spend it, but if you took that $500,000 $500,000 as an example, and you put that in investment, let's just say it generated a 10% return. Now, 10% is not guaranteed. I'm just using this as an example, as an analogy, because it's easy to multiply, okay? But 10% of 500,000 is $50,000 a year. $50,000 a year is about $4,000 a month. $4,000 a month wouldn't replace you, but it would replace a portion of your income. Well, see, that is how you should look at income protection. We use a thing called a dime, okay? Dime, D-I-M-E. The D in dime is debt. So you, besides replacing your income, you have some debt. Would you want to burden your family with debt if you weren't here? Would you want to make sure that was wiped out? The income, the I in the income is what I just showed you, how much money on a monthly basis to replace your income. The problem is when I say income, and I said what would your expenses be, the problem, the sad fact is most people make and spend about the same amount of money, so their income really is their expenses. And then you have your mortgage. Would you want to have the mortgage paid off or not? And would you want, the E is the expenses. Would you want to make sure that the money's there to protect the expenses that you have right now to maintain your lifestyle? Well, your wife brings money home to the kitchen table too, and so if something happened to your wife, that money would stop coming in. Sometimes people say, oh, well, my wife doesn't really have to work. And I always say, well, then why does she work now? You know, sometimes people use that, so I like to brag about some of the objections up front. Sometimes they'll say, well, if something happened to me, my kids should be taken care of. You know, my family would take care of them. Well, sometimes I hear that, or sometimes people say, well, I have investment properties or rental properties that I have, or if something happened to me, I would still have income generated. Like I sat down with a client one time, and they owned a bunch of real estate. I said, well, who collects the rent? Who watches the buildings? Who maintains that? They said, well, I do. Well, I said, but if I wasn't here, my wife would be able to handle that. Well, why doesn't she do it now? Why do you go into work? See, the reason you go to work every day, most people go to work every day, is because they need to generate income. Well, if you're not here, God forbid you passed away, you still need to generate income to pay your bills. So what I use as an example, let's just say the person says, well, my spouse doesn't work. She might not work outside of the house, but he or she will definitely work in the house. So someone's got to watch the kids. Someone's got to take care of the kids. Someone has to maintain the house. And I use this example all the time. You ever get a babysitter for your kids? I said, well, yeah, I've gotten babysitters before. Why? Because we went out to dinner. My wife and I went out to dinner, and I need someone to watch my kids. Well, you had to pay to have someone watch your kids. Well, if your wife's not here, and how are you going to go to work and what? You'd have to pay to have someone do that, right? So you can't replace you or your spouse, but you can replace the income that you need that's generated to pay the expenses. And so the example I like to use is when I go through that, when I do the financial house, I like to use examples and make sure we get a commitment. You know, I think the challenge that we have sometimes is sometimes when people don't spend money on insurance, you can't talk about saving money because they're not spending it already. You've got to talk about how to generate and how to sell a value, right? Salesmanship is the ability to change a person's point of view. Help people get involved in something that they benefit from. Well, you know, everyone's got goals and dreams. Yet a lot of us spend money on things that don't get us closer to our goals and dreams. So I like to use some examples. Like I'll use an example about spending money. I'll write down auto insurance, and I'll say, well, you know, you spend money on auto insurance. Why do you spend money on auto insurance? They said, well, you know, I spend money on auto insurance. First of all, because in most states it's a law, but you spend money on auto insurance even if it wasn't a law. I drive a nice car. If somebody stole my car, I want to make sure my car is insured. If somebody smashed into my car, I want to make sure my car is insured. Instead of laying out $100,000, say, for a car, you'd want to have insurance, right? Why? That's what they say to you. Well, I have insurance so that if someone steals my car or somebody smashes up my car, it's protected, right? Okay, it makes sense to protect your car, right? And what do you spend on your auto insurance? Let's just say they save $2,000. So you spend $2,000 on your auto insurance. Homeowners insurance. Why do you think people have homeowners insurance? They say, well, I have homeowners insurance that if a hurricane came or my house burnt down, God forbid, or my house was flooded, my house could be replaced. So instead of laying out $400,000 or $500,000 maybe to rebuild a home, I would have insurance to protect my home, because my home is a large asset. Well, what do you spend on your homeowners? Let's just say they said $4,000. Okay, $4,000. Why do you think people have health insurance? And I would write down health insurance. Well, I have health insurance right now because if something happened to me and I had to go to the doctors or the hospital, I need an operation, sometimes it could be $50,000, $100,000. I've seen people that had terminal illnesses that spent hundreds of thousands of dollars, and if they didn't have proper insurance, they burden their family with that debt. So what do you spend on your health insurance? Let's just say it's $1,000 a month. So, okay, so just so I understand, you spend $2,000 a year to protect your car that depreciates and rusts. There's no real value in it. You spend $4,000 to protect your asset, which is a large asset, a $500,000 home. You spend $1,000 a month, which is $12,000 a year, to protect so you don't burden your family with bills. The biggest asset you have is your ability to replace income, your ability to bring income to your family. You're the biggest asset. You're an income-producing asset. Bigger than your home, bigger than your portfolio, bigger than your retirement plan. A human being, you cannot replace a human being, but you can replace the income that they come to protect their family, the income that comes to the kitchen table. So the thing that I like to share with people is, first of all, show them that it makes sense to protect. And let me give you an example. Let's just say you had a machine, and that machine printed money out. Now, I know that's illegal, okay? But let's just say you had a machine that printed money out. Let's just say your expenses were $4,000 a month. And let's just say that you had a machine that printed out $4,000 a month. That every month, that $4,000 a month paid your bills, paid for your, invested for retirement, your college, everything, covered all your expenses in your house. And that machine that you had printed out money, and it paid all your expenses. But if that machine ever broke, then that $4,000 stops coming in forever. But you had an ability to insure that machine, where if you could put insurance in that machine to ensure the fact that if that machine broke, you could get it fixed with the insurance, and that would continue to pay that $4,000 on a monthly basis to cover your expenses, would you insure that machine? Think about it for a second. You would never, ever not insure a machine that printed out money. Well, you're that machine. You're that ability to replace income. And so what happens is people right now most people would never let that machine go uninsured. So just like you wouldn't want your home uninsured, you wouldn't want your car, you wouldn't want your health. You want to make sure that your assets, your biggest asset is you, your ability to earn income. See, sometimes when people don't spend money, you've got to show them the features and benefits. And I think the biggest challenge that people have right now is they're not used to spending that money. There's so many things that we spend money on right now that are frivolous, in my opinion. There's so many things that 30 years ago, the average person in the world didn't spend money on. Now think about it for a second. Most of our clients have Cablevision, don't they? They have some type of cable that they pay for TV. If you would have told someone 30 years ago you had to pay for free television, they would have told you were crazy. Right? So what do you think the average person spends on their cable? They'll spend anywhere from $100 to $150 a month just to cover TV. They have the sports package, right or wrong, they'll do that, right? And then think about cell phones. 30 years ago, none of us walked around with cell phones. Now, most families, the husband, the wife, the kids, we've got 4 or 5, I've got 7 cell phones on my bill every month. So some of us will go out and spend $100, $200 a month on a cell phone bill. That doesn't necessarily get us closer to our goals and dreams. Think about this. We'll spend that kind of money. Internet. 20 years ago, none of us were surfing the web. None of us were on the internet. You ever get on a computer, maybe you're on vacation or something, you got a computer, and it's old dial-up computer, and it's a little slow, and you're like, oh, and you get upset because maybe it's not as fast as you think it should be? 20 years ago, we couldn't even get on the internet. Now we'll spend $40, $50, $60 a month so we have the high-speed internet in our house. So a lot of us spend $200, $300 a month on things to make our life easy maybe, but we don't spend $200, $300, or $400 a month. We don't invest to protect our short-term and our long-term assets, which is our game plan. And so one of the things that I try to do is get people to put together a financial game plan. The first thing you've got to do is get a commitment from somebody. You're getting a commitment from someone to put together that financial game plan. So let's just say that financial game plan that you put together for someone, let's just say that financial game plan, that the commitment was $300 a month. So I would write at the top of the paper, financial game plan, and I'd use $300 a month. And now let's just say, now you've got to use examples, okay? Now, if you're in the field for a while, you'll know that if you sit down with a person that's 35 years old, $500,000 of life insurance will cost about X amount of dollars. When you sit down with somebody who's in their 40s, it'd be about X amount of dollars. You don't have to get exact. This is just an analogy. It's a concept you want to share with somebody. When you talk about a financial game plan, there's 2 problems. One is dying too soon, and the other one is living too long. So I would draw a little piece on the paper. I'd say, look, $300 a month, a percentage of that money we're going to put towards income protection, right, which is life insurance. God forbid something happens to you and you die too soon. Then we're going to take the other percentage of that money and we're going to put that towards your investment or your retirement. God forbid you live too long, right? Kidding around. So what you do is you take a percentage. Let's just say we took $100 a month. You're 35, your wife's 35, and just use this as an example. Say we took $100 a month and we put $500,000 on you and $500,000 on your wife. So right away, instantly, if something happened to either one of you, that $500,000 wouldn't replace you, can't replace you as a human being, but it could replace a portion of your income used to pay your bills. Well, so we took that, now your family's protected. So if I set that up for you today, your family's automatically protected for $500,000. God forbid you die too soon. Well, let's just say we took a percentage of that. Let's just say out of the $300, we took $100 for income protection, and we took $200 a month, and we put that towards short-term savings and long-term savings, maybe college or retirement. And let's just say we took, as an example, $200 a month, and we put that in an investment for retirement. And let's just say it yielded a 10 to 12% return, which is not guaranteed, but just as a hypothetical, as an analogy. And you took $200 a month and you invested that for the next 30 years. That could grow potentially to well over $500,000. So what you've set up for $300 a month is you've set up a $500,000 financial game plan. Dying too soon, living too long. Now think about it. Most people buy cash value life insurance. They don't buy cash value life insurance because it might not necessarily be the best investment or the best rate of return. But a lot of times people buy cash value life insurance. They buy cash value life insurance because it has some form of a savings element. And I think the biggest challenge that people have sometimes is they're selling term insurance, but they don't add a mutual fund component. Now, you don't combine life insurance and savings when you buy term invested difference. You keep it two separate entities. But you've got to have a financial game plan for people to look at, and that covers both. And so part of what I want to go over with you is the fact that when you sit down with a person, you've got to get a commitment to protect their family. And if they're not spending money already, then you've got to create value. And how you create value is by educating people, not trying to push them into something, not trying to sell them into something. But hey, listen, if I sat down with you today and you were my brother and you were my sister and you had children and I had nieces and nephews, I would want to make sure that those kids are protected. See, if you knew you were going to get in a car accident today, God forbid, would you drive without any auto insurance? If you knew you had to have a surgery, you knew that you were going to have an emergency situation in a couple days from now, would you let your health insurance lapse, knowing that you had to go into a hospital for major surgery? Folks, we all know our date of birth. None of us know our date of death. You want to make sure you protect your family. Now, sometimes when you sit down with people, sometimes there's some objections or areas of concerns that people have. And my feeling is there is no legitimate objection or area of concern on why you shouldn't protect your family. See, when I'll sit down with people in the past, and I'll sit down with them, and they'll say things like, and I've heard some wacky things like, hey, well, I passed away when I was younger. My father passed away when I was 2 or 3 years old, and I was able to make it. Well, think about it. Wasn't it difficult? It was very difficult. So why would you burden your family? You're protecting your family now, aren't you? You take care of your spouse. You take care of your kids. While you're living, wouldn't it make sense to take care of them while you're not? And I'll kid around sometimes with people because I don't care what people think about me on the way in. I care what people think about me on the way out the door. And so when you sit down with people sometimes, I've said this to clients. I've sat down with clients before, and they have a little 1-year-old kid sitting there with their little diaper on. They said, well, if something happened to me, my kid would be fine. I said, your kid will be fine. How's your kid going to make income? How's it going to generate? Well, he'll be fine. He'll be okay. So I'll kid around and say, well, tell your son to give that diaper back right now. He's a year old. Let him go get his own job. What the hell are you buying his diaper for? What the heck are you buying his diaper for? They could buy their diaper themselves. And it sounds silly, doesn't it? You want to protect your family. So I'll say to people sometimes, hey, listen, if it took you $100 a month to protect your family, and you had $500,000 on you and $500,000 on your wife for $100 a month, and it was free, would you do it? And so, if it was free, I'd do it. So then the challenge is you don't want to not protect your family. You just don't want to invest $100 a month. So I'll say, well, then you need to get off your wallet, okay? No, I don't say that. But what you say is the $100 a month is, so you've got to show the value for that $100 a month. That's why you'll talk about the cable, and you'll talk about the internet, and you'll talk about the cell phone bills, because they'll spend $100 on that, but they might not want to protect their assets. See, when it comes down to it sometimes, you've got to show the value and why you need to invest that money on a monthly basis. Sometimes they'll say to you, well, my wife doesn't work, and we talked about that. Your wife doesn't work outside the house, but she definitely works inside the house. There's no way you could generate the same income and have the same lifestyle if you had to take care of the kids and work a full-time job. Speaking about jobs, sometimes they'll say, well, I have insurance at my job. I'm covered at work. Most of the time, what you'll find is they're not properly protected. I've sat down with people that were police officers that had $15,000, $25,000 of protection at their job, and they said to me, well, I'm covered at work. I've got good benefits. And they realized maybe their good benefits weren't as good as they thought. The way I look at insurance on the job is I personally would want to make sure I protected my family with a personal plan. This way, if I got laid off at my job or I changed careers, because if you get laid off at your job, you change careers, you can't always take that personal plan with you. Sometimes it terminates. Sometimes it gets converted over to an expensive policy that you can't afford. So always look at insurance at work as an extra, as a benefit. When I run a financial needs analysis, I don't use insurance at work. I add that in extra as an additional benefit. So if you want to use insurance, you've got to always make sure, in my opinion, you should protect your family personally. Sometimes people say, well, I can't afford it. Right now things are tough. I'd rather talk about saving and investing. You see, the thing that we talked about in a financial house, I want to talk about retirement. You see, I talked about the foundation in the financial house. Your foundation is your insurance. That is where we start. That's not where we stop. See, the foundation is your insurance. The second thing that we talk about in your financial house is we put together what's called an emergency fund. An emergency fund, you should have somewhere between 3 to 6 months expenses put aside, even if it doesn't get a great rate of return, for an emergency, in case the boiler goes or there's a situation in your family, you need to come up with money right away, the car breaks down. You don't want to put yourself in a position where you tap into your retirement early, you break open your kid's piggy bank so that you can borrow. What you want to do is you want to have an emergency fund just in case something happens. So the second thing after insurance is we put together an emergency fund. The next thing we look at is debt. Everybody has it. Most people act like they don't, but everyone's got debt situation, right? And so what we do is we put together what's called a debt elimination program. And the debt elimination program, you might not be on track to get out of debt right now, but you better at least get on the train. And so we put together a debt elimination program. The next thing we look at is we look at investing, short-term and long-term. We look at college. Putting together college is a challenge today because it's expensive, and it only gets more expensive as time goes on, as you notice. It's tough to put children through school, and so people are concerned about that. So we look at college, and then we look at retirement as the roof. The roof is your retirement game plan. And then we talk about protecting your assets after everything's put together. The last thing we talk about is protecting all those assets using some of the vehicles we talk about. Okay, so when you look at your financial house, your roof, a lot of people would rather talk about their retirement in the roof versus the foundation of their income protection. And I say, hey, listen, the greatest financial minds in the world put together a financial needs analysis. And so every time I sit down with a client, if they want to talk about getting out of debt, they want to talk about college, they want to talk about retirement, all that's important, and we can do all that for you. But the first thing, the most important thing we need to do is we need to protect your assets. Because if college is really important for your children, and it's tough right now financially on 2 incomes, how would it be, God forbid, you weren't here? Do you ever see someone who gets laid off of their job and maybe they're out of work for 3 months or 6 months or a year? Doesn't it devastate their family most of the time financially? Well, if you passed away, you're gone forever. So as tough as it is when a person loses their job, you ever notice when someone loses their job, their debt goes through the roof, their credit cards go through? Why? Because what happens is it's tough to live on a less of an income. Well, if you're not here and you're not properly protected, your expenses still have to be paid. And so the thing that we've got to do is before I handle debt elimination, because if debt's a challenge right now, if you weren't here, it'd be a bigger challenge. If college is a challenge, if you weren't here, it'd be a bigger challenge. If you want to put together retirement, I'll put together a financial game plan, but we have a step-by-step process. And the first thing I'm going to recommend is putting together income protection. That is the first thing. And so sometimes when people say, I can't afford it, I say, hey, listen, if you can't afford it and things are tight, sometimes I'll sit down with clients and maybe they have a lot of money in their retirement plan and they have a lot of equity in their home and they've got a lot of reserve and cash in the bank, and they still need to have income protection because they're still generating income, but they might not need as much based on their assets. But when I sit down with a person that has not enough assets or they have a bunch of debt and things are very tight, folks, that's even more reason you need to protect your assets. Because if things are tight now, how would things be if you weren't here? You know, when I was being trained years ago, somebody said to me, when I sell income protection or insurance, the thing I always ask is, who do you love? And the first time I heard that, I thought that was a little odd. But if you think about it, who do you love? See, when I first got involved in this business, I was a single guy. I didn't have, when you usually have income protection when you have a lot of responsibilities, okay? But I was single. I wasn't married. I didn't own a home. I didn't have any kids. So I didn't have a lot of need for income protection. But I had a mom that I was helping support who raised 3 kids on her own. So I put up a couple dollars a month, and I had income protection to myself to make sure my mom's life would be okay. So not to make her, life insurance is not to make someone better off when you're not there. It's to replace income, and it's to put yourself in a position to maintain the same lifestyle that people are spending right now. So I think there's no objection you can have or that someone can sit down with you on why you shouldn't put together a game plan to protect your family. And if you're going to protect your family while you're living, you should protect them if you're not here. Folks, I think if you take some of the stuff that we talk about today and you go out there and apply it, you get some experience on your own, and you take you out of it for a second and you put them in that situation. See, if every person we sat down with, we knew eventually was going to need protection, would you want to protect them adequately? Of course you would. So do the financial needs analysis, gather some information, and show them exactly. People aren't going to always do what you think they should do, but our goal is to show them exactly what they need. I hope that helps. Look forward to seeing you guys soon. Stay well.